Is going on YouTube? I wanted to get my Tuesday video out for you while the market is open. It is 2 o'clock Eastern time. So we have Microsoft and Google reporting earnings after the bell today, and that's going to be critical to see if this bear market rally continues, guys. So we're going to click through the charts, look at our targets, including for the cryptos, look at Bitcoin, look at everything else. Remember, all of this was triggered by that market manipulation of Nick Timiraos's article that the Fed may pause and or pivot, be more dovish at this meeting coming up. So here's what I think's happening. What I think's going to happen is, the Fed floated that out there. They leaked that information to Nick and then they sent Mary Daly, the San Francisco Fed head, out there to say the same thing. That was Friday morning. Everything was red. We were going to have a big pan sell-off. And of course, everything reversed and went up. And we're on this rally. Okay. So now the Fed is on its 2-week blackout period. What I think happened and is going to happen is quite simply the Fed did that information leak. They have no intention of pivoting or pausing. If anything, you may see them in December go from 75 to 50, but I don't think they're going to say that at the next meeting, guys. Here's why. We have the macro picture here of the election November 8th. Now, they don't want the market selling off. So as much as the Fed doesn't want to see the market rally, because that means, there's easy money flowing into the market. They don't want to see the market rally, but they also have elections coming up. So they let this happen. They let this information leak out. They sent the Fed head out there to talk about a potential pause or how we could slow down. But I think what you're going to have is this 2-week blackout period. Markets may continue this rally. We're at very close to peak resistance in all the charts here. We're going to go through it. They may continue this rally. I'll show you the targets where it can go to. But what's going to happen is when the Fed has their meeting November 2nd, November 3rd, you're getting 75 basis points. You're going up to 4% on the interest rate. And if Powell comes out hawkish at all, that rally's over, guys. The rally's done at that point, okay? And we're not that far away from that. So we may fade out before that, because if Microsoft and Google don't report strongly, if Facebook's tomorrow, and then you have Amazon and you have Apple on Thursday, if all of these, if they report with these revised earnings expectations. Remember, earnings were revised a lot for this quarter. For Q3, the average report is about 1.7% up. Earnings are still sitting at 8% for the S&P for 2023, which is going to be the full-blown recession year. That's when you're actually going to see bad earnings. They're not going to be able to fudge it. They're not going to be able to sugarcoat it and say, oh, we're going to cut costs, we're going to do this, we're going to do that. You're going to see that in 2023. Why? How can I say that so confidently? Again, guys, it's all about the math and the marketplace. 9 times in our country's history since World War II, we had above 5% inflation. All 9 times we had a recession. And obviously some of those times were the bubbles, okay? The 73, the .com, the '08. So you're going to get a recession. It is close to 100% certainty, as I'm willing to say, because nothing is certain in life, but you're going to get a recession. The average drawdown in the S&P for recessions is minus 35%. You're like at minus 21% right now. There's a lot more to go down. And as you guys know from watching this channel, I believe we're going much further down in the S&P than that, because we're not only going through recession, we are exiting a bubble. So let's go ahead and kick this off and look at the charts. TNX, 10-year Treasury yield. So if you see the 10-year spiked up, came back down, magically found support at the 1618 at 4.075. We'll see if this can hold this. If it does hold this, you're going to come back up, right? Whether you make a double top type structure or you hold that support and then look to pivot out. But this is what you're going to try to do here on the 10-year. This is why it was important to flip this. Remember, I told you if you flip this, you have more upside. If you flip it, hold it as support, get your sell-off, 1618, 4.075, the 10 years at 4.097. So for right now, it's holding this as support. You look at the dollar. Dollar also came down because of that news that the Fed may stop or may pause or may be more dovish. Why? Because the dollar gained strength vis-a-vis rate hikes, okay? So you're still getting that 75 basis point rate hike, and I think you're going to see the dollar rebound. Once again, it's just below 111. It's at 110.888, and you can see it came down to the 618 trying to find support at 111, okay? So if the dollar holds up here, the 75 basis point hike is going to bring it back up. Let's go ahead and get these projections off here. And we can do this differently, because what you're doing here on the dollar is you could end up making a double bottom. Here's your W pattern. for those of you that are familiar with TA, be your W pattern, something like that. Okay, so let's go ahead and measure this upside projection of where this would go potentially. And looking at the 1618 at 117.013. Okay, now you got to hold, you got to make a bottom here, obviously. But if this comes further down, look for this Ganfan line here to potentially be support as well, which could be somewhere around 110. You're still staying in that 110 range, the bottom range of 110. See if you can hold that. And if this does come back up, you could be looking for this projection, of course. And of course, right now we're still at the highest the dollar's been since Y2K. And if we go ahead and bounce over to the NASDAQ, or to the S&P. We talked about this before, guys, but notice the first time in 2008, great financial crisis, when the S&P got below the 200 and 233, this was the first time, you got a 10% rally back up. Okay, you got a 10% rally. You fell back down, got deeper below the 200, 233. Then you got a 15% rally back up. Let's see exactly where we are here. We got below the 200, 233. See this wick? And right now we're standing at just under a 10% rally after dipping below. So this is where we're at. The rally could begin to fade here. Could be coming up to the 618 at 39.14. You guys know I kind of targeted 3,800. I said if we can flip that, we can go up higher. We're at 38.44, and that's where we're at right now. So if we come up here, look at the 618 at 39.14, and that's the next viable target here. And right now, like I said, you're at just about a 10% rally. It is 10.42%. So if you did go 15%, like you did in 08, you'd be looking at the S&P at 40.30. Okay, so let's go ahead and look at this over here on the daily time frame. The S&P, remember, this is the broader market, so we're looking at the S&P. Your key resistance point that you are pumping up to here is the 50-day moving average here in the daily time frame. Okay, you're just shy of it, 1618 at 38.89. So this is going to be a key area to flip. You have to flip this to be able to move up, and if you do move up, these are your key trade areas, guys. A 200, 233, higher up. 200 is roughly at about 4,100. 233 is roughly about 4,068, okay? So that's your key trade area, and you got to flip this first. You got to get past the 50-day. Now, one thing to note, the volume, there's no breakout volume here. It's just average volume bars and below average volume. So, you know, you're building volume divergence here on this price move up. You're not getting a breakout volume bar like you want to see, one of these big breakout bars for a big price change, okay? So again, low volume, and people, I've heard people say in the comments, well, you can always have low volume on price rises. That's called volume divergence. Why does price rise? Because the shares that are being offered for sale, say for an asset, people are paying higher prices for them, causing the price to rise, but the number of transactions, the actual volume, is low. Okay, this is how you build tops, because eventually you burn out of buyers. That's how you're able to build these tops, and this is how we're able to get these trades. We talk about volume divergence a lot on this channel, but this is how, partially how I nailed this top. The 200-day moving average, this is a big trade, and look at your volume the whole way down. Negligible volume as price was rising, okay? Right now you have some average volume here for your initial breakout, but again, you want to see a big volume breakout bar like this to really spike the price up, okay? Show a lot of participants in the marketplace, or else you burn through those participants really quickly, and that's how you build tops, and that's how you can find these trades. And if you notice, you can have volume divergence for a very long time. So it's something that you build into, but is another confluence for looking for a top. Now let's go ahead and look at the S&P on the 8-hour. 8-hour, let's go ahead and measure this out. Do a wave projection here on the S&P. Come up here, come down there, come down here. All right, 1618, once again, 38.89. Again, what am I doing? I'm measuring this double bottom. Okay, this is what I'm measuring with the double bottom, the trend fib. See what my wave is here. And you can see the 8-hour time frame, your 200 is just above it, your 233 is just below it. So that 38.89, the same from the daily, okay? 38.89, where you have the 50. Lots of resistance there. Lots of resistance there, and if we go ahead and go forward to the 4-hour time frame, you can see you got above your 200, 233, and your VWAP, okay? So now what are you going to do? You want to see if you can hold this up here. You're above your 1 fib here at 38.19. Here on the 4-hour time frame, we measured this differently. We can go ahead and change this to match trend-based fib. Measure this double bottom. Oops. I gotta readjust that one, misclicked. All right, and go like that. 38.89. You see that? So you start lining these up and you can see what price is doing here. Now, again, this is going to be heavily dependent on earnings, the big tech. And why is the big tech important? Because Apple alone has a 7% weighting on the S&P. One company, 7% weighting on the S&P. Okay, so if Apple's numbers come in bad, and I'm not saying they will, I have no purview at all into any of these earnings. Okay, so I'm just putting that out there. But if any of these earnings miss the mark, even though they've been revised and revised and revised to be lower and lower and lower, if any of them miss the mark, you could see the markets reverse. But if they continue to be not as bad as feared, you're going to see potentially this rally continue until what? Until you get to peak resistance. And your peak resistance is going to be 38.89 until you can flip that. 38.89 gets you above the 8 hour, the 200, 233, and on the daily, that gets you above the 50. So you got to flip 38.89 on the S&P, hold it for support, move up to try to tackle your daily 200, 233. It is a big ask, but this is a rally, okay? This is what you're getting in a bear market. You're getting your bear market rally. Again, the NASDAQ lost to 200, 233 in the weekly, and now it's shooting back up. NASDAQ has a substantial rally going on as well. Let's see what the NASDAQ rally up is right now. Almost 12%. So almost 12% rally. So again, the 618 here, based off a weekly time frame, you can see the weekly trend-based fib projection here from the beginning of the wave to the peak to the base here, the lowest candle, 618 at 12,086. Let's go ahead and throw on a weekly moving average on here. What do we have one? No, we'll have to go change one really quickly. Let's change this one. We'll make it simple moving average. You want to look at your weekly 50, your daily 200, and see where this is at. So your peak resistance here on the weekly would be like 13,410. That's 2,000 points away, okay? I don't anticipate at all this going that high. But let's look at the daily, okay? Daily, measuring this double bottom structure once again, 11,782. And let's see, look at your volume. Your volume's decent. Again, you don't have any breakout volume, but you do have average volume bars in here. So let's look and see what we have with the moving averages. Let's see if we can throw on 200, 233 or higher up. Where's our 50, 55? Let's use this one, make this a 50. All right. And you can see that's right coming down to the 1618. So just like how the S&P is approaching the 50, the NASDAQ's approaching the 50, your 200, 233 on the daily are up here at 12,884. What was those numbers over here on the weekly pattern? 12,884. So that'd be above 12,000 on the 618. So again, this is a lot of resistance here. You want to see if you can flip this. Again, not just wick it. You got to flip it, hold it, build your Livermore pivot. So you'd probably come up, you sell back off, you roll back down, got to hold this area, and then break back out. And what happens if you don't break back out? Well, then you come up, you get your supply dumped on you, you come down, you make your base, and you come back up, and you roll back over again. And what do? You're making a double top, right? Which is what you see over and over again at peak resistance points. So that's what you're looking for here to see if the NASDAQ can flip this 50 at 11,782, hold it as a base of support, and move up to challenge the 200, 233. NASDAQ on the 4-hour time frame, again, that very important time frame in primary downtrends, you're looking at the NASDAQ here, and again, worth noting, you're basically at the median line here on the money flow. The move itself is not very strong, and if you're looking at this move here, you got above the 233, above the 200, 11,782. Right here at the 1618, you're getting close to that, okay? So because the NASDAQ does this a lot, especially because it's so volatile like the Russell, always look for these types of structures, okay? So once you come up to an area of peak resistance, let's say it's the 1618, look for that roll back down, okay? What you're trying to do here, here's a successful breakout. You rolled down, you came back up, you went sideways, and then you pivot it out, okay? This is a failed breakout. This is how you make the double top. You come up, roll down, make another attempt, come back up, and you roll back over, you go sideways, and you dump. So we want to see what the NASDAQ does here. If it can pump up to 11,782, that is only about 160 points away. So we want to watch this quadrant here, and you'll be above the 200, 233. Now, is it possible to get above the 200, 233 and fail? Of course it is. You can see it over and over again when you look at the charts. We have to go way back for this, but you can find it on the charts when you go back. And other times, of course, you can just hit the 200, 233 and dump. Okay, so let's look at the Russell here on the weekly. Russell on the weekly pumped up to 1790. Remember, we were closing up for a month below the 300, pumped up to the 200, 233. And that's where you're at. You're getting rejected right now by the 200, 233 at 1790, roughly 1798. Both of these right here, they're overlapping each other. The 382 on your fib is 1785. So lots of resistance right now on the Russell. If the Russell can flip this, the number I'm looking at is 1877. So if the Russell can come up, flip this, hold it as support, make its pivot and break out, I'm looking at 1877 here. Let me show you why. 1877. Right now on the Russell, see the small caps are leading the big caps, right? So the Russell pumped up on its chart, relative to its chart, pumped up faster, and it's at the 50 daily right now. It's already getting rejected by the 50 daily, but look where your 200 is. You see where your 200 is? And remember what we talked about, the trade that I posted, the trade that, lots of people took this trade and made a lot of money on, the 200. When you pump up to the 200 on the daily time frame in a primary downtrend, guys, this is a massive, massive trade. When you look at this, this is a 20% decline in an index, okay? And with leverage. So when you look at this, and you can trade all this on SimpleFX, the equities, Forex, commodities, link in the video description. With our link, you do get our $5,000 bonus instantly. No games, no gimmicks. It's based on deposit. All the information is in the video description. And trade all the cryptos on BITGET, guys. Our two fabulous sponsors. And of course, check out our Discord, the join button right underneath this video. So this 200 is where I would like to see the Russell pump at this point. Yes, it can get rejected here, but again, with the big tech reporting earnings, if it comes in decent, just decent, I think the rally continues. And then Wednesday, Meta's probably not going to be good. But Thursday, you have Apple and Amazon. And if those come in decent, the rally continues. And on the Russell, this is only, what, $90 away? $80, $87 away? $97 away. I can't do math in my head. This is 1882. Let's go ahead and just put a fib on here so you can see this, okay? So this is 1882 here. And if we take a larger wave projection here from that base to that peak, right there, down to this base, look where you're sitting. I mean, this is what's so beautiful about Fibonacci and confluence of resistance. Look at this quadrant. 200 moving average lining up with the 618, the most commonly retraced to fib. That's assuming, of course, you break past the 50 daily moving average. Right now, the Russell's at 1791. So 1785, this number is the resistance of the 200, 233 on the weekly time frame, guys. That's where you're stuck right now, okay? You're stuck right here at the 1785 at the 200, 233. If you break above that, there's your 618 at 1877, okay? And on the daily, that's your 200 moving average. It's your 618 on a weekly pattern. It's your 200 moving average and your Fibonacci 618 on the daily. This will be an awesome trade if price can pump up to this area, okay? So we have to wait and see if that happens, obviously. Actually, I'm hoping the earnings come in good. And if you look at this, by the way, look at the volume on the Russell. This is garbage, right? This is how, again, part of the reason, just like all the indices, this is called volume divergence, guys. You can read about volume divergence. There's a lot of books on it. Wyckoff was one of the premier people trading with volume. Gartley was one of the premier people trading with volume. But if you understand volume and you understand participation in a marketplace and you look at your peak volume left to right, look at this. It just dramatic decline in volume. This is also, going along with this story, retail's been pulling out of the market. Robinhood numbers are down. All the retail trading sites numbers are down. And you can see that, but you can also see price rising, volume divergence, okay? And this went on for days and days and days. This went on all the way to August 16th, and it started back on June 16th, it went on for a month. You had this massive volume divergence to the point where the candles were getting extremely negligible, but price kept making new highs. Again, this is people, this is FOMO paying higher prices for assets because some of the things they want have gotten down to a level, and you hear the money managers on TV all the time, oh, well, I'm looking at, Peloton's down 80%. I mean, 80%. How much lower could it go? They actually said Snap's a better example because that's very recent. Snap was at like $10. There's people on YouTube, there's people in the business media that I watch all day long talking about, I like Snap here for a play. It could be acquired by another company at $10. It's already off 80%. How much more could it possibly fall? Could it go down a little bit? Sure, but I think the upside, there's more risk to the upside than downside. And what happened? Snap reported bad numbers. Snap went down another 30%. It was down over 90%. These things can go down, okay? These things can go down a lot, especially if they don't make any money. So looking for this volume divergence, and you're building it right now. You have very low volume and price is rising once again. 200, peak confluence for resistance combined with your 618. Let's just throw on one more here. Let's see if we got the VPVR showing anything. Visible range volume profile. See if we can pull some candles in here. I'm going to get rid of this stuff here. Pull some candles in here, and then look at this volume spike you have, okay? Look at the volume spike you have right here. So this is also resistance, okay? So your 618 is just underneath some volume spiking out here, and this is going to be really good resistance with the 200. Can you get above it and wick it and stuff just like you did here? Yeah, of course you can. But in general, this is a great target area. And people ask me all the time, why do I trade the Russell? Why do I trade Bitcoin? Because they're highly volatile. The Russell has 25 to 30% of its makeup of the Russell 2000. That's 2,000 small cap companies. It has 25 to 35 to 30% of those companies are zombie companies. They live off of financing their debt. They don't make any money. So it has the ability to really drop, which is why the Russell of all the indices was the only one closing below its 300. Okay. So I want this to rally up. It makes the target easier to short. So watch the 50-day moving average here to see if and listen to the earnings. Of course, I'll be making videos. But if they come in decent, well, I want to see this flipped, moved up for support, and watch that 1877 on the Russell, okay? And then let's look at 8-hour, same thing. 4-hour time frame here on the Russell. Again, bearish money flow, no force behind this move. Big up candle, and you didn't get any type of upward force, Elders Force Index, guys. You didn't get any type of upward force on there. And of course, the money flow, you got to move up here, not much. And you probably have some divergence here. Yeah, slightly. You have divergence here as well. You made a lower high here on the money flow, but you made a higher high in the price, okay? Not a big divergence trader. We were talking about this in the room. I trade, I'll look at the obvious divergences, obviously. But I do trade with volume divergence because that is a leading indicator. Everything else I just use for confluence of what I'm already thinking and looking at in the charts. And you can see here the way we laid out the fib. You pumped up to the one fib, 1800. I think you got to 1801, 1802. And now you fell back down. So here on the 4-hour time frame, this is where you got to start building your base because you see all your pumps, guys, they all go the same way. Well, not all the time. Sometimes you get these quicker ones like this that just sell off. But you come up, you make some type of sell off. Okay, here's your supply being dumped on your 4-hour candle. You got to hold the base wherever you are, which in this case would be 1786. You see that? This keeps you on top of the weekly 200, weekly 233. Right? If you get below it, it becomes resistance again. Right now it's support. So you're above that from an algorithmic standpoint, and now you need to start your Wyckoff steps. You have your buying climax candle, and you want to see the candles either come down more to give you that the base, the automatic reaction, unless this is going to be your base, and you want to see price do its thing, go back and forth like this, and what you want to look out for, again, is that pivot. I got to really work on my art skills, right? So you sell off, you want to hold this base, and then you want to come back up, right? You want to come back up and be able to pivot out to move up to the 1877. If you end up just doing this, you sell off, you get a candle up here, you get a rejection, you come back down, you fade back down, you find some support here, you come back up, you don't pivot out, then you just end up making a double top. Man, my art is going downhill, but this is an example of it over here, guys, okay? So you get your supply dumped on your candle, and then, of course, you fade back down. Maybe you fall below support, you get a big demand wick back up, you get that that second rally attempt, you fade back down, you go sideways and you dump, okay? So that's where you're at in this phase right here. You hit key resistance, you pumped above the weekly 200, 233. Now let's see what type of shape you start making in the 4-hour time frame. You're going to make a double top, or you're going to make a base, okay? A backup, it would be called exiting the Wyckoff trading range. You want to make a backup and then pivot out more towards the upside. And then let's go ahead and look at Bitcoin monthly. You're not going to see much change at all. On the Dante's Descent, very obviously this is a weekly pattern, so you're not going to see a whole lot here. Let's zoom in on the weekly pattern. So weekly pattern, you got Bitcoin moving up to 20,153. Bitcoin's barely moving. It's just been oscillating, as you can see. I mean, if you can tag this off. I mean, we have our trading range here of 24,287 to 18,603, and all the trading. This is a weekly time frame. All the trading since June has been between 24,287 and 18,603. But in reality, you could even tighten this more. I mean, you can see just on the weekly time frame, your price is so tight here. 20,479 has been your ceiling. So you want to see if price comes up here on the weekly time frame, because really what you're doing, and I keep showing you guys this, but you're just making a series of lower highs in a wave pattern. Okay, so now this is your wave back up, and you're going to come back down again. And what you're doing here, you'd have to defeat 22,800 at least to beat this little swing high, okay? So you'd have to get above 22,800, or else you're just making 3 lower highs in a row. But let's zoom in on like a daily time frame. Daily time frame had a VWAP up here, anchored VWAP from that peak. As you can see, you ran into the VWAP, and this was our downward projections. But let's go ahead and flip this, since obviously the price is trying to move up. So let's go ahead and get upside projections. Go to that 17.5, go to that peak, and then where's the trough? Is that the trough? That is 18,130, and this is 18,098. So here. So this you can't even get up to the 382 yet. It's at 21K, so that's not going to be very useful. So let's try a fib retracement, or we can do a tighter wave projection. We can do that too, and we'll see if fib retracement shows us anything different. Let's do a tighter wave projection. There you go. You're pumping up towards the 0.5 at 20,242. The 618 would be at 20,748. And then obviously the 1 fib would be the top of your trading range at 22,385. Bitcoin's at 20,171. Let's see what a fib retracement will show us here, going up from that. Oops. I have a trackball mouse. It can be tricky sometimes. See fib retracement? Yeah, we're not even contacting it yet. Okay. So you'd have to pull this from a lower level, like this peak here, to get a retracement level, and it's pretty similar to what the numbers I just gave you. So 2 different ways to look at that, but basically this is your trading range that you've been in, and you've been in the bottom echelon of this trading range for a very long time now. And if we go ahead and let's just tighten this up so you can see what I'm talking about. Basically been, do we have one here, candle? There you go. So you see this? You've basically been in this trading range of 20,172 to 18,688, back and forth, back and forth, back and forth. So you want to break above this, make some type of shape that is bullish, that is not a bearish pattern like a double top. And usually you see this with a pump up, a rollover, hold your base, your cup, that's what we'd call it, Livermore pivot, and then an acceleration up to the upside. And, again, I don't think it's anywhere near close to getting to this 25,000, but that's your 233, and then your 200s at 26,680. These will keep descending. At some point, Bitcoin's going to test them again, and when it does, it will be a massive trade, as we are in a primary downtrend. But I think this would judging by how little this pumped up versus relative to the indices, the indices are up, 10% on a rally? Bitcoin's not up that much. Let's just look at this. So Bitcoin, 71% of Bitcoin I saw in the news has not moved, okay? So it's not being sold. This is a 12% rally, but, it's just looking at it on a chart perspective, that's from the very base here, obviously, 18,160. But, to come up here, guys, this would be coming from this base to the 200, 233. That is a 43% rally. I mean, I just don't see that anywhere in the cards. Maybe you can get up to the 150 here. I mean, that would be cool to get up to the 150, because that might end up being a good trade too. Let's see if we can find a wave here. We don't really have a clear double bottom structure here. Well, I guess you can do this one right here on the daily time frame. Let's try this little baby double bottom right? So we got a spike here down, spike back up right here, and then another spike down. So we can do this here, here, here. That 1618, 21,635 gets you really close to the 150. You see that? That could be interesting to see if Bitcoin can pump up to there, and also gets you in this upper quadrant where you've had issues before, obviously getting rejected here. So got to watch that, but really it's just going to follow the equities, guys. If the equities sell off, Bitcoin's selling off. Equities are pumping, Bitcoin's moving up right now. This is good. We've been stagnant for so long and everything. Well, not everything, but we've been stagnant for so long in Bitcoin's trading range. This is really good to see some momentum occur here. Yeah, you can see the double bottom here as well. Actually, let me go back to that daily. Let me see if we can measure this out. See what we got here as far as we can do this type of pattern. See what kind of X5 pattern I have here, Fibonacci pattern. Yeah, that's going to fit one of the patterns. It's not my pattern, but that'll fit something. But this will be interesting to see if we do come up to that level. 8-hour time frame, massive up candle, as you can see. What is that, your 233? 8 hours coming up to the, yeah, it is your 233. 8 hours coming up to the 233 to challenge that. One fib right here, the way this is laid out at 20,423. So we'll see how that holds up. This is 20,491 on a daily time frame. Depending what candles you grab, guys, obviously, you're going to get, you know, slightly different, especially if you're using, these are BitGet charts, but if you mix your charts like Coinbase, BitGet, whatever you're using, you could get some slightly different numbers. But 20,491 and 21,635, these are two areas that you want to watch. And let's go ahead and go to 4-hour time frame. So 4-hour time frame, again, uber important. Lots of trades on the 4-hour. As you can see, you're getting quite extended above your 200, 233, right? Last time you got above it, you made a bearish shape, double top, fell down. Excellent trade, right? All the way down to that base. But now you're definitely getting some juice on this pump, okay? So now you're pumping up. And that's the whole key here. Now that you are pumping up, to see exactly where you could go. And again, to see if this rally has any legs, you need to wait and see what these earnings are for Microsoft and for Google. If those earnings come in good, this rally will continue, okay? Because the equities are going to rally. If those earnings come in bad, the rally could end abruptly. So we'll watch that. I'll keep you guys updated. Let's go ahead and put some more levels on this chart as well. So let's get the 1272. Let's get the 1414, one spot 128. And now, you can see here still 20,423, 20,721, 1618 would be at 21,860. And again, once you get above this is some candle resistance right here, right? This is where you made your previous double top, right at this same exact area. So you need to watch this 20,423 because this is where you petered out before. But if you get above this, you want to hold it, make your cup, and pivot out, okay? Regardless of up and down in the Wyckoff volatility range, you got to hold it, make your cup, and pivot out. If you don't, you can easily make a double top and fall back down. And let's go ahead and keep going forward. Ethereum also blasting off here out of the 618 box. All of these, a lot of people aren't trading in these ranges, but, as we talked about with Bitcoin, as we talked about with Ethereum, had a lot of great trading opportunities here, especially for shorts. And if you want to be, adventurous and long in a bear market, you can do that. I primarily short in bear markets, take my profits off, but, just trading this back and forth. And now that we're pumping, let's get some new trend-based fib projections here, okay? So let's go ahead and take this off. Those are upside. It's our downside. We'll go ahead and clean this up a little bit so we can do it like this. Let's go down to this deepest retracement, come up to that peak there, that swing high, and then that swing low. And you look at that. You tag the 1618 at 1512. You see that? You hit the 1618 at 1512, knifed right through it. So again, you want to see if you can hold this. And of course, you could take a larger trend-based fib projection too if you start moving up even more. But you're above your 233, above your 150. everything's pumping up. So watch for this to see if you can hold this. If you do roll back, you want to hold support. 1479 would be a good area to hold support and start going sideways. Your money flow is coming up to the overbought area, which will give you this type of shape here. You hit the overbought, 90-10, come back down. So you want to watch that, okay? But you're starting to get long in a tooth on this pump, which is why you may end up retracing some there. Looking at XRP, not a lot of movement on XRP. We were down at 44-cent range, and now we're up at 47-cent range. So still splitting the 200 and 233. So XRP hasn't launched above both of them yet, but it may launch above both of them, and if it does, then you got to look at these other fib projections, because you do have a double bottom here. If you can start getting more upward momentum, right? This is a daily time frame on XRP, so you can take this bottom, come up to that swing high, come back down to that swing low, assuming this holds. You can start looking at your targets. This would give you a 61-cent XRP at the 1618, currently at 47 cents. You're above the 382 at 46 cents, 0.5 at 48 cents, and then 618 is at 49 cents, okay? Those are your immediate targets, but if you can flip this and get more upward momentum, watch 54 cents at the 1 fib and the 1618 at 61 cents. But again, got to see how long this rally has legs in the equities market. Gold pumping back up. It's going to reject it twice now at the 382. Almost got to the 0.5, almost got to the 200. Got up to the 382, got rejected again, so third time's a charm. Let's see if we can get up here to the 0.5 at 1673, which is just above 1672, has your 200 moving average now on the 4-hour time frame as well. Okay, so this is an area, if gold does pump up here and the markets look like they're going to roll, this is an area I'd be looking to potentially short gold here on SimpleFX, okay, because this can give you a nice drop back down. Could be a very profitable trade once the rallies peter out. And again, here on silver pumped up to 19.66 on this wick, fell below 233, trying to pump back up again. So you want to watch and see what silver does here on the 4-hour time frame. Let's go ahead and throw 200. Oh, that's your 200. Okay, so we got above the 200. So you want to watch 19.66 because that's where you got a big supply dump on you prior, and then that causes downfall here. So watch that and see if you end up recoiling again. Oil still has a lot of barrels being dumped on the market. The strategic oil reserve is down to 1984 levels, below 1984 levels. All this is done for the election to get the consumer sentiment, the voter sentiment, like, oh, maybe inflation's not that bad. Maybe Biden's doing a good job because gas hasn't really gone up that much. Here in Florida, it's like $3.40 a gallon for regular. I know in California it's crazy, but gas prices are still up, and consumers are still mad. And I just went to the grocery store before making this video. Ridiculous prices. Coca-Cola just did its earnings today, and it beat on the top and bottom line, just like Pepsi did. And they're talking about it on the business news like it's such a great thing. Well, Coca-Cola, they raised prices so they could keep their margins intact, and that's great. That's great as an investor in a company. They're keeping their margins. They're not taking a profit hit, and they're raising prices. Correct. They're raising prices to combat inflation. And this is how inflation gets sticky, is you get companies raising prices to equal out what they were losing for the cost of the goods that they have to purchase to make their products. You have workers going to businesses and saying, hey, inflation's been 8% the last couple of years. I'm making less money. I haven't got a raise in 2 years, or I got a 5% raise, but inflation's really like food inflation is 20%. So I'm actually losing money working here. So then people get pay raises, and that's how you get stickiness in inflation. Okay, you get wage inflation, you get the death spiral in inflation. Inflation rotates from sector to sector, and you're going to see that with this inflation, which is why the Cleveland Fed, as we went over last video, is predicting inflation is almost identical to last month going into this month, even though all you hear on the news is how the leading indicators of inflation, used car prices, home prices are dropping. It's because it's built into the system, and it's going to be super sticky like it was all in the 1970s. And the way Volcker got rid of it, guys, was what? By jacking up interest rates, real rates above the rate of inflation, which for us would need to be 9-10%. We're not even halfway there, and we're not going to get any more than halfway there. We won't go above 5%. So it's going to be a long battle, okay? And the market has no idea what's coming for it next year. Full-blown recession at some point next year. You will see earnings actually be bad next year. Companies will be contracting. What is an effect of companies contracting? They don't need as much workers. They lay people off. People don't have jobs. People don't pay bills. They don't pay mortgages. They don't pay credit cards. All of this takes time to unwind. And until then, we get to enjoy this nice bear market rally, look for our high probability targets, and help every single person out there find financial freedom. All right, guys, tune in for the next video. It's good talking with you as always. Go ahead and leave me a comment, like, and subscribe, and I will respond to you in the YouTube comments as well. Hope to see all of you on our Discord. Take care, everybody.